When you look at lithium today, it's very difficult to get anything across the line that you're looking to fund from a greenfield perspective or a brownfield perspective. We have a lithium resource indication where we believe our volume is about 22.7 billion cubic meters. We know an average grade about 110 milligrams per liter, which equates to about 10 million ton LCE. So a very strong sort of foundation to work off of.
All right, welcome back inside our proactive newsroom. And joining me now is Ali Haji. He is the CEO of Lithium Ion Energy Limited. And Ali, it's good to see you again. How are you?
Excellent. Thank you, Steve. Pleasure to be here.
Yeah, just before we get into you've got some pretty significant news out today. Maybe just remind everyone a little bit about the company and more importantly, the company's asset, which is a key one.
Of course, Ion Energy, founded in 2017, went public in 2020. We have two assets in Mongolia, Babayul, in the southern corridor of the country. We have Urgat Naran, which is very much a brine asset, and I think that's going to be the focus of our conversation today. We also have two assets in the hard rock space in the Northwest Territories in the Yukon. So somewhat a global company in terms of lithium exposure, but today's focus really is on Urgat Naran.
Yeah, so you've signed a joint venture agreement with SureFQ. So tell me a little bit about this company, and it sounds like this is a really perfect partner for what you're trying to do.
Indeed, SureFQ is a company that's been around for a few years. They've perfected a technology that is a DLE technology, ultimately allowing them to bring up the brine from paleosalars or even surface salars at low grade, producing lithium carbonate or a concentrate at a cost perspective that is very competitive in today's market. You know, lithium prices have dropped from $85,000 in the last 2 years down to about $10,000 today. And the production profile that is anticipated here will sit around $2,500 to $3,500 US. So their technology is not only tried and tested in China, in Shanghai, Tibet. They are currently looking to deploy their technology to Argentina as well. And it's a modular style technology that allows you to scale up on production with minimal environmental footprint, minimal permitting. It's a very well put together process that I think will be very valuable to our shareholders in Ion.
So this joint venture agreement allows for some cash into the company, but also really allows for them to try to sort of get the development of this going and the exploration of this going. Can you sort of explain how the deal is going to work?
Of course, I think, you know, when you look at lithium today, it's very difficult to get anything across the line that you're looking to fund from a greenfield perspective or a brownfield perspective. We have a lithium resource indication where we believe our volume is about 22.7 billion cubic meters. We know an average grade of about 110 milligrams per liter, which equates to about 10 million ton LCE. So a very strong sort of foundation to work off of for SureFQ. Their technology ultimately allows them to build a modular, progressive path to production that allows them to reach commercial production in about 3 years. But as they start to chip away on those production profiles, Ion Energy continues to carry a 20% free carry. So there is a profit sharing agreement in place. Beyond that, when they reach that narrative, which is 10 million ton, or rather 10 million US, I beg your pardon, in terms of revenue generation, that's when SureFQ takes on the entire ownership of the project, and Ion will maintain that 2.5% NSR. So it's a good sort of accretive value generational procedure that allows us to not only have revenue, but in terms of ensuring that there is capital coming into the treasury as well.
Yeah. So let's talk about long term now. What do you see for the company over the next, 6 months to a year? What are some of the things that we should know about?
Great question. I think, you know, in terms of Urgat Naran, we want to see that come online. We want to see some value being generated on something that we believe to be a very strong project, irrespective of where the lithium market is today. We know that the proximity to market with respect to China being the largest consumer and that trend continuing over the course of the next few, maybe quarters, even a decade, given BYD and the other various auto manufacturers in China having a significant impact around the world. We see China as driving the price of lithium going forward. So being so close to China with respect to our assets has always been our hypothesis, and we continue to see that being as accretive to us as a company. In terms of what we look at outside of Mongolia, we are contemplating lithium assets around the world. We're also looking at strategic metals, so rare earths and what have you. And we look forward to SureFQ being the partner that allows us to monetize our currency and as well as balance our treasury for us to execute upon those various transactions that we have in mind.
Well, it sounds like it's exciting days ahead. Ali, thanks so much for giving us an update on where everything's at, and we look forward to our next conversation, okay?
Thank you, Steve.
All right, Ali Haji, he's the CEO of Lithium Ion Energy Limited.